Hi there everybody and welcome to another video. This is not going to be a video of doing a stock analysis or crypto videos because I would personally just like to talk about what has actually happened in the markets within the past week. And as you can see right here, pretty much everything has just been collapsing. The day of reckoning has finally happened. Now, is this going to continue or not? I don't necessarily know. However, I would like to talk to you about what I am specifically doing, seeing all of this just red all over the place, specifically within the NASDAQ. So with that said, let's get started. Within the past 7 days, we have seen a huge decrease in pretty much all the indices. The NASDAQ is leading this collapse at 2.72% or around 385 points just on Friday. And a lot of people are seeing this and they're really getting scared. And me personally, I have been waiting for a moment like this for several months now actually. Mainly because of the fact that I am of the mentality that I want to buy all of these amazing companies at super cheap valuation. And as we all know, since the beginning of 2021, all of these meme hype stocks like AMC or Peloton have just been completely exploding in popularity, bringing the price up to ridiculous levels. As you can see right here, Peloton got all the way up to $150 and AMC actually got all the way up to $72.62 at the 52-week high, and right now they are currently completely collapsing, essentially going back to their fundamentals. Investors are finally getting weary about what's actually happened within the markets. In fact, this has gotten so incredibly crazy that today the S&P PE ratio is a whopping 25.08%, where the mean usually trades around 16. So we are about 10 basis points on the PE ratio for the S&P 500, which is just massive to think about. All in all, in my personal opinion, we are going to continue seeing this crisis continue to go even further down into the red, and Michael Burry has even said that he's predicting a 94% crash. Now, I'm not necessarily thinking that that's essentially going to happen. I don't necessarily know how low this is going to get, but that's not really the point of the video. The point of the video is telling you guys what to do when seeing red days, because a lot of people tend to panic, they tend to sell, and that's just human nature, right? When things get really bad, you see your portfolio tens of thousands of dollars in the red, essentially you want to panic. That's the main thing to do, because you want to save as much money as possible. However, doing so is probably the worst thing you could possibly do. What I personally love to do during these downturns is use as much capital as feasibly possible to buy up as many companies as I can now that they're very cheap. Let's just take a look at Apple real quick. The perfect company, this is usually the gold standard, mainly because it is the #1 company on the planet. Guys, the current market cap of Apple is $2.69 trillion. And in fact, it used to be at like $3 trillion. So I just have one question to ask. Do you think that Apple would change its business model or strategy if the share price actually went from $162 to, like, let's say $50? No, they wouldn't. Apple would not change anything in their business model or their outlook for the future if the share price actually goes down. Share price is just the identification of how much the market values this company at this current time. And this is not in your control. This is basically what investors, retail investors, essentially put the value of the company at that certain time. If there is a lot of hype with this company, or if it's just on the news a lot, well, it probably is going to get a lot of attention, therefore it's going to go up, which is what we saw with a lot of these hype companies like Peloton and AMC. But let's just say that nothing changes in the company. Apple continues making their iPhones, their revenue doesn't stop increasing, their income doesn't stop increasing, their cash flow continues to go up. Wouldn't you want to buy a company that's worth a market cap of almost $3 trillion at $50? That's just, like, in my personal opinion, seeing the share price go down, it is significantly better than seeing it go up. People tend to buy things when they're in the green, and in reality, this is the worst time to buy pretty much anything. People get rich. Wealth is made in recessions, in depressions, because you are able to buy up everything that people are just not wanting at the time. So what I'm trying to say is, do not get afraid whenever you see a downturn like this. In fact, take it as a positive. It is very difficult to see a company that you hold go down and then you wanted to buy somewhere and then seeing that go down again. However, this is why in my stock analysis videos, I make it a point to analyze companies not based on their share price, but based on their fundamentals. Because again, These numbers are the ones that you have to be looking at. These numbers are the ones that the company controls and are the ones that you should make your assumptions on. If Apple's share price goes down to $50, but in 2022 they make $400 billion in revenue, why not take advantage of this increase with the revenue and the share price going down to buy significantly more amounts of Apple, seeing that the revenue still continue to go up? Because at the end of the day, Warren Buffett always says the stock market, in the short term, it is a voting machine, and in the long term, it is a weighing machine. In the short term, people just tend to buy whatever it is hype or whatever is pronounced on the news. In the long term, though, the price usually falls down to the fundamentals and what it actually is supposed to be valued at. Smart money comes in, and then the price value adjusts to this smart money. So at least for me, I have around 47 companies that I currently hold right now. And me seeing this complete crash of pretty much the entire market, even the crypto space, by the way, I'm seeing this and I'm just salivating at the mouth, seeing all of these amazing companies that I'm going to be able to buy at a super cheap costs. And I would say use this opportunity that we are getting for you to buy a company that you've been eyeing for a while. For example, I've been looking at Broadcom for months now, wanting to buy this company at a decently good valuation, and I have just not been able to get the opportunity. It went all the way up to $667, and right now it is trading at $533. And in doing so, I bought around $1,000. I dollar cost average within 2 days $500, and I bought at each dip 1.86 shares in total so far for Broadcom. And if this thing continues to fall, I will continue to add to my position and dollar cost average. In doing so, this will solidify me buying at the correct share price that the company is actually valued at, because the market will overvalue things and it will undervalue things. However, if you dollar cost average all between the ups and the downs, you will eventually just pay the equivalent of what this company should be worth. And Broadcom is definitely a company that I am eyeing and I will be buying non-stop if this thing continues to drop. And the more it drops, the more I'm going to buy in, because I want to be an owner of this company. So all in all, I'm looking at this market crash and I am absolutely loving it. I hope that this thing continues to drop. I want an 80% drop if possible, because I want to buy all of these companies at a super cheap valuation. I want my $100 to buy me 2 shares of Apple if possible, instead of my $100 buying less than 1 share at the current price of $162, right? The more that these things crash, the more your money will be able to buy, the more of a position you'll be able to hold, the more of an ownership you have for this company. You have to be able to think in this way. You have to see these companies as you own them, as you are an owner of this company. And in order to do so, you have to change your mindset from a hype mentality to looking at them as, if I buy them, I am an owner of them. These companies are real, and I will be taking part in their revenues, in their cash flows, if I invest in them. Just because their share price is down doesn't mean anything to me. If their revenue and their cash flow and income continues to grow and their share price keeps going down, that is the best scenario on the planet. As Warren Buffett always said, be greedy when others are fearful, and be fearful when others are greedy. For the past 2 years, the markets have been extremely overpriced. People have just been very greedy. And through all of that, I've been trying to find some good companies to invest in that are cheap but still have great fundamentals. And if you guys just see my stock analysis videos, you see that majority of them are really expensive. But right now we are getting the opportunity to actually buy companies at a very good valuation, or even under valuation. So at this point of the game, me personally, I am taking advantage of this and I am buying as many companies as I can. That's all I want to talk about in this episode, guys. Hopefully this gives some kind of hope for the future, especially in your portfolio, and hope to just not panic, right? I'm a basic investor. I'm 25 years old. I'm not worth millions or billions of dollars. I am just like all of you. And me personally, seeing this, I am loving it. I am salivating at all of these cheap prices, because now I might actually have a chance to get up there when it comes to wealth. And I think all of you guys should do the exact same. So that's all I want to talk about. Peace out, and be on the lookout for the next video.